Welcome to Crypto New, your daily source for the latest cryptocurrency news, market analysis, and major price movements. If you find this update helpful, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss an important crypto update. Today, the cryptocurrency market is experiencing heightened volatility as prices fluctuate sharply and investor confidence remains fragile. Market participants are closely watching every move, attempting to determine whether the current phase represents a temporary correction or the early stages of a broader trend shift. Bitcoin, the largest cryptocurrency by market capitalization, attempted to recover earlier in the trading session. Buyers entered the market as prices dipped, pushing Bitcoin higher and briefly restoring optimism among traders. This upward move, however, lacked strong follow-through. As Bitcoin approached key resistance levels, selling pressure intensified, forcing prices to retreat once again. This pattern has become increasingly familiar in recent weeks. Rallies are met with immediate selling, while dips attract cautious buyers who remain unwilling to commit aggressively. This tug-of-war reflects uncertainty and a lack of strong conviction on both sides of the market. Investor psychology plays a critical role in this environment. After an extended period of rapid price appreciation followed by sudden corrections, many traders are now prioritizing capital preservation. Instead of chasing upside momentum, they are taking profits earlier and reducing exposure near resistance zones. Macroeconomic uncertainty continues to weigh heavily on crypto markets. Global financial conditions remain sensitive to inflation data, central bank policy decisions, and interest rate expectations. As traditional markets struggle to find stability, cryptocurrencies, often viewed as risk-on assets, tend to experience amplified volatility. In addition, geopolitical developments and concerns about global economic growth have further increased risk aversion. When uncertainty rises across broader markets, liquidity often declines, making crypto price movements more abrupt and less predictable. Regulatory developments also remain a major source of concern. Recent delays and unclear direction regarding cryptocurrency legislation in the United States have contributed to market hesitation. Investors are aware that future regulatory frameworks could significantly impact exchanges, stablecoins, institutional participation, and overall market structure. The absence of regulatory clarity discourages large-scale capital inflows. Institutional investors, in particular, require predictable legal environments before committing significant resources. As a result, trading volumes remain muted compared to peak bullish periods. Another factor influencing today's sentiment is institutional activity. Large on-chain transfers of Bitcoin and Ethereum to centralized exchanges have been observed, raising speculation about potential selling or portfolio rebalancing. While such transfers do not guarantee immediate sell-offs, they often create short-term fear among retail participants. Overall, Bitcoin continues to act as the primary indicator of market direction. Until it establishes a clear trend, uncertainty is likely to dominate the broader cryptocurrency landscape. From a market structure perspective, Bitcoin is currently trading within a critical consolidation range. This zone represents a battleground between buyers attempting to defend support and sellers aiming to regain control. A decisive move in either direction could shape market sentiment for weeks to come. Derivatives markets provide additional insight into current conditions. Funding rates across major exchanges have moderated, suggesting reduced speculative enthusiasm. Traders are becoming more cautious with leverage, reflecting uncertainty rather than extreme optimism or fear. Liquidations have played a significant role in recent price action. Sudden price movements have triggered forced closures of leveraged positions on both the long and short sides. These liquidations amplify volatility, creating rapid spikes and drops that can mislead less experienced traders. High leverage environments tend to exaggerate price movements. When markets move against crowded positions, liquidation cascades can occur, accelerating momentum in either direction. This dynamic contributes to the unstable price behavior seen today. Volume analysis further supports the narrative of indecision. Trading volume has declined compared to previous high-momentum phases, indicating that many participants are waiting on the sidelines. Low-volume markets are particularly vulnerable to sharp reactions when new information enters the system. Technically, Bitcoin faces multiple resistance zones above current levels. Each rally attempt encounters selling pressure, suggesting that sellers remain active and confident. Conversely, buyers continue to defend key support areas, preventing a deeper breakdown for now. This balance often results in range-bound trading. While such conditions can frustrate trend traders, they also provide opportunities for short-term strategies focused on well-defined support and resistance levels. However, it is important to recognize that range-bound markets do not last forever. Periods of consolidation often precede strong directional moves once uncertainty is resolved. Ethereum has closely mirrored Bitcoin's behavior, reflecting its strong correlation with the broader market. Despite continued development activity and long-term growth potential, Ethereum has struggled to attract sustained buying interest during this period of uncertainty. Capital appears to be rotating away from higher-risk altcoins toward more established assets or stablecoins. Many smaller cryptocurrencies have underperformed significantly, experiencing sharper declines during market pullbacks. This pattern is typical during risk-off phases. Investors reduce exposure to speculative assets first, preferring liquidity and capital preservation over aggressive returns. Sector-specific trends also reveal weakening momentum. Tokens related to decentralized finance, gaming, and meme-driven narratives have seen reduced interest as traders focus on managing risk rather than chasing narratives. Ethereum's on-chain metrics remain relatively stable, but price action suggests hesitation. Buyers are unwilling to aggressively push prices higher without confirmation from Bitcoin and broader market sentiment. This reinforces the idea that altcoin performance remains highly dependent on Bitcoin's direction. Until Bitcoin establishes a clear trend, altcoins are likely to remain under pressure. Looking ahead, several catalysts could influence the market's next major move. Upcoming economic data releases, central bank statements, and regulatory announcements all have the potential to shift sentiment rapidly. Short-term traders should approach the market with caution. Volatility creates opportunity, but it also increases the likelihood of sudden reversals. Without clear confirmation, emotional trading decisions often lead to losses. For long-term investors, periods of uncertainty are often viewed as strategic accumulation phases. Historically, strong market participants tend to build positions during consolidation, while weaker hands exit due to fear. However, no strategy guarantees success. Dollar-cost averaging, diversification, and disciplined risk management remain essential tools for navigating volatile markets. In summary, today's cryptocurrency market is defined by uncertainty, cautious sentiment, and heightened volatility. Bitcoin and Ethereum remain range-bound, while altcoins face continued pressure. Despite short-term challenges, the long-term outlook for digital assets remains intact. Innovation, adoption, and institutional interest continue to develop beneath the surface, laying the foundation for future market cycles.